We should be up and running, so do let me know. Let me know as well what you think about the sound. I do know sometimes we're not actually as very loud. I mean the actual settings here on the microphone. So let me know what you think about that. We're live as well on Periscope, so thank you everybody that is joining us via Periscope today via the Trade Captain handle. My name is Alejandro Zambrano, and I'm the Chief Market Analyst here at TradeCaptain.com. Okay, good. So I can see that we're live. So guys, thanks so much for joining me. If you are on YouTube or have access to it, then you're most welcome, guys, just to say hello here in the little chat box. It's always nice to have interaction with you guys. Okay, good. We're gonna take a look at the markets. It's 9:10 a.m. in London, so we're running a bit late. And we're gonna take a look at the markets. Euro, Bitcoin, Crude, DAX, and so on. We're also going to talk a little bit about the pound. So the pound, as got hammered yesterday and sort of continues a bit today, just because of Mark Carney, the unreliable boyfriend. That's what they call him, just because he changes his mind as an unreliable boyfriend. So we're going to take a look at that. But before we start, as always, I need to stress that trading financial markets is unfortunately risky, and there's a risk that we'll lose all of our invested money. As well, if you want to follow me on Twitter, then follow me on AlexFX00. As well, we do have a short-term technical educational webinar coming up next week. So if you like this kind of stuff and you especially like scalping, then we have that webinar taking place on Friday next week at 3 p.m. London time. If you register, you get a link so you can watch the recording afterwards. So as long as you're on the list, you'll get that video. And of course, if you join me live, even better. And then we have another webinar coming up on May 10th, which is my top trade ideas for 2018. Sorry, May 2018. Follows the same structure of the webinar we did for April, I think a week or two ago. Okay, if you want to know more about that, by the way, education webinars. Okay, let's begin. So we're starting to see a little bit of a change in sort of the rhythm of the markets. The pound has come down quite a bit. Australian dollar as well, and New Zealand dollar actually took out my key level and stop loss level overnight. So we're starting to see some strength in the dollar. And in the euro, you can see here on this daily chart that the market looks to get ready to move back down to the lower end of this range. And I'm using a daily chart because the market is not respecting the short-term levels that you see in within this range, which is 121.55 and 124.78. And with that in mind, I like just the big levels. And if it goes down, one can try to go long at 122.49 with stops at 121.55, so you risk about 100 pip, and then maybe it'll bounce as it did here and here and here. So that's something. The alternative is that we take out the high, and that gets things interesting. And I think in the long run, we will probably hit to the upside. So I'm overall bullish. Here's Bitcoin, and Bitcoin is something you want to watch today. The market, as you know, took out this high here, which is the April 2nd high, and that was the entry to go long. Myself, I bought some other coins. I bought Ethereum, I bought Ripple, I bought as well Litecoin, and I'll show you a little bit more about that in a few minutes. And Bitcoin as well, it was interesting, just below, bottomed out just above this February low, as we discussed many times in the past. And the market so far is working out good. Now, why I think this is interesting today is that this is the high from last week, so April 15th and 16th. So that would be Sundays and sorry, Monday's high. And usually when you take out a high like this, you'll get more of a push to the upside. And any traders that are short are gonna be squeezed out as well. So here there is potentially that we'll see a move. We're talking about a 8.21% move versus a risk of about 7 and 53, and it's sort of the same setup I showed you guys. So here in the live technical analysis section, I publish content and setups and ideas, and as well Yuri, my colleague based in Australia. And what I did a few days ago is talking about Ethereum, and I said yesterday, actually even put it on Twitter several times, I said if we take out this high here, this market could go to the upside. You see going up, traded sideways, and then it pushed above the high. So this was a nice 8.4% return versus a risk of about 10.59. And you know what? I think this market is going to continue to trade to the upside. I think if you just look at this, and if you traded cryptos before, you know that people that trade these markets, they're just in it for the quick move. I've been into places where they sort of I mean, give you an idea who actually trades a lot of these markets. Well, it's the Asians, right? Well, do you remember the big bull market in the Chinese stock market in 2014? That's the same market that went up with about 120% in a few, maybe 6 months or something like that, and then it tumbled. Sort of reminds me, and they have, they like this kind of things, and I've been there several times before. I work with colleagues as well, and if they start to get involved, I think we're going to get a very nice push. They don't care if we already moved up a bit. They're going to buy more, as they did here. And some people did make money on the way up. I was one of them. The key is just to know when to step off. And a lot of people don't know that. Anyway, you see that break here? That's sort of what I suspect could happen to Bitcoin. So break the high, move to the upside. And if we just use simple logic, take a Fibonacci from the top to the low. Well, first fib level is up here. So we could and should probably at one point maybe reach $6,768 here in Ethereum. And in Bitcoin, we will most likely at one point at least correct up to maybe the high here, which is 11,508. Okay, so that's a little bit about cryptos, and then cryptos in general just doing very good. Let's continue, and this is crude oil. Now, crude oil, here the market is bullish about 65.15. In fact, I think we can reduce that level a little bit to the actual low. This is a low created on the 17th, which should be, yes, it's Tuesday. And here you can see that I just took a simple fib from the low to the high. So if this is a genuine uptrend, then when we start to reach the first fib, maybe a little bit lower, traders are going to start to think, maybe we should try to carve out a low. So if you've been wanting to buy this, we're starting to reach these levels. So look at this zone. This zone starts pretty much from 67.75 or so, and 76, 66, and goes down to 67. So somewhere here, I suspect traders going to look to get involved. If it goes all the way down here, we risk 2.2%. If it goes up, we make 4%. Those risk-reward ratios are really important. When I trade, I say I'm looking at trends, or where we could have a potential trend, where I look to make some not a silly, but a good risk-reward ratio. And I know people have been telling me this for years, and my own experience, that's sort of the whole way to trade. We can talk a little bit about my trading results by the end of this presentation. Anyway, here's the price of gold, and gold bullish above 1,302, and I think down here at 1,320 the market could look to bottom out and potentially hit to the upside. And there's not much happening here, so keep an eye on this. You can put an alert. A lot of different services have an alert system, and you get yourself an email when something happens. And sort of the big level that I like is if we take out this level here. We'll take out this level, and we go up, and then continue to move to the upside. Now, here's the German DAX, and the German DAX is holding up well. I think it's because the euro slowly drifting to the downside. The market took out these highs. I said this is an opportunity to turn bullish. The market moved all the way up, and I thought it was going to head higher, but sort of stopped increasing. And as well, the S&P and the Nasdaq as well, they started to rollover, and I think we'll see more weakness in the US stock market. So I suspect this same thing may happen here. So I think if you want to trade, there's two options: break to the upside. Alternative, let it come down, and it will probably move down eventually. I have a feeling, that this could potentially peak here. Um, Over the last, I think it was Monday or Tuesday, as you know, I've been talking about the Nasdaq and the Dow and the S&P, and I did publish updates about that as well. When we're trading down here, I said the market could potentially bottom out. If it takes out this high, it's time to get involved. And the market did move up, down, and up, and I went long here at around 6,660, went all the way up, booked profits here. So you can see here how the Nasdaq is going lower, and I think this could weigh on the German DAX as well. This is the Dow. I also got not like an amazing entry at all. I started to buy about here. It's actually more complex than that, but average entry somewhere about here. And then got out here. And here as well, the market looks to head lower. Now, that's the main presentation today. We're going to see if we can answer some questions. Then we're going to talk a little bit about my results as well. I just want to explain to you sort of what trading really is. Not really about the way it is. So question, why not take the last swing low from Bitcoin from 11,000-ish to 6,000? Yeah, for your last fib calc. What do you mean by not take? Like, why not go long? I don't really understand what you mean, Antonio. Why not take the last swing low in Bitcoin from 11,000 to 6? So you mean to go short? Okay, I think I know what you mean. Yes, you can do that as well. It is sorry, so you can take the whole move. It sort of depends. That this is the problem with technical analysis. And technical analysis many times is a little bit more of a science, sorry, more of an art than a science. So I think that this market, historically, if you put the log charts on and you look at something like Bitcoin, it's hard to see here, but we know, for example, that after sort of this is a decline 86%, and then the market recuperates that, and it's done this many times. Here is a decline of 81%, and then it recuperates. So this more data obviously from 2009 with some other brokers. The key point here, though, is that after sort of a 86% decline or so, should most of the time the market bottom out and then we head higher. So my assumption here is that the market will eventually go all the way up to 20,000, and that's why I'm taking this whole fib. Of course, if one is more of a short-term trader, just trying to optimize things, then you do like that. And then we are at the first fib, if that is what you mean. So I'm not really sure what you mean still, what you mean. But yeah, you can pull the fibs from various levels, and that gives you sort of an indication where you could target. I think in general though, like I done my homework, so I looked at the top 10 coins. So in a normal bull market, and also in long term, you're gonna get maybe, well, on average it declines about 50%. Some coins are 70, like Bitcoin Cash. And then on average, every coin is gonna give you, of the top 10 coins, it's gonna give you about a 250% return. So it's like simple mathematics, risk reward ratios. Imagine make 250 but risk 50 every time. It sort of makes sense. And then one just needs to make a calculated guess. And here, the situation, you risk 14% here if you went long on this break. And then right now you're up at 10, so that was not the best one. And that's why I bought Ethereum So Ethereum, I bought it down here. I was part of what initially could have been a false breakout. So you see here on the 4 hour, the market moved up higher, and then I took a fib like that. So that's 14.5%. This market is now at 37, and that's, let's just load the calc. 37 over 14, that's 2.5 times, and you getting this right now in cryptos. I know, I mean, a lot of this stuff is just silly stuff. Not silly stuff, but who knows if we're gonna use Ethereum in a few years. But if you're trading like I am, you trade more 1 month, hold position for a month or a few weeks. I don't really care what's gonna happen in the future. And what I did is that I started with an amount that I have no issues losing. And because last year, because these markets go crazy, I did about 200 and something percent on this position. And I have been withdrawing my money, my initial capital. So right now, my initial capital out of the whole pot is 13%. So most likely, if I can close these at good levels, I'm gonna withdraw the last part, and then it's literally just money that I made from the market. So if I lose that, obviously it's not gonna be fun. At least I'm not gonna get any problems with my wife. So uh, in general, when I take swing lows to calculate my fib levels, is because I am taking the stop loss. So if you're working with a trend which looks like this, then fib. So every time I move the stop loss, that is always where I push my fib, and then I pull it from whatever high it is, because I'm looking to trade higher, right? And I'm looking to get involved on that pullback. So it's this pullback sort of I want to get involved with, and from that perspective, this is why I always put my fib at the stop level. So where you put this fib on the stop levels is a bit of a judgment to some extent, but it's not like totally random. You're putting your stop level at the right level if the market takes out your low and then continues lower. That's when you know if you focus on the real level. If it just goes down and up again, then you're doing it wrong. Okay, so I'm just gonna pull up some stuff. As I promised, gonna talk a little bit about the risk reward ratios, because I know a lot of people, not a lot, but some people try to sort of discredit the whole. Some people try to discredit the whole risk reward ratio. So initial risk reward ratio is important. Sorry, it is important, but what's most important is the actual. What's more important is actual average win versus average loss. Okay, so initially one sets out to have a stop loss of 100 pip, and you look to make at least 150 in return, sometimes 200. In Bitcoin and these things you can get more. But then at the end of the day, it sort of depends on exactly where you actually get stopped out and your average win versus your average loss. So to give you an idea, most of the time, because I trade trends, I buy here, and sorry, you see I buy here, and obviously if it goes all the way down to my stop, I lose 100%. Okay, but the market, if the trend is right and I'm doing it correctly, it might undershoot a bit, but then the market just heads higher, and then it goes down, and then it goes up, and at one point I move my stop loss from this level to this level, and that happens about 60% of the times. Some 40% of the time or so, I just get stopped out immediately. But because about 60% of the time I can reduce my stop loss, then my actual average loss is actually much smaller than the 100 pip here. Maybe my average loss is gonna be, I don't know, 50, something like that. So if I just do that part and I always hit my target, because I'm looking for a risk reward ratio of, if I risk 100%, 100 pip, I want to make 150 pip. Then on average, I'm going to get my, well, not on average, but if I hit my actual target, I'm going to get 150 pip return. And then on average, the high target is going to be the target. So you make that. But when you lose, it's going to be a combination of a 50 pip loss and a 100 pip loss. So then suddenly your average loss is actually much smaller than your loss on potential loss on the onset. And that's really important, and you'll see that in your training. And this is sort of the important part. This is sort of the risk reward ratio that is important to work with, and it's really important. In 2014, and this is trading on my own account on Forex and CFDs. So in 2014, that was when that Chinese stock market was going mental. I bought some of that, traded the euro as well. It was when the euro was just tumbling down. So I made a nice 34%. In fact, it continued to rise. And in the beginning of 2015, I was up by a substantial amount. But then the market started to trade sideways, and I was insisting on trading short-term breakouts and in the very small-term charts, and I did that for a long time. So I gave up some of the gains I had, but at the end of the year, I still was up with about 18.5%. Now 2016 was just a bad year for me. The few trends that were there, like stock markets, I'd never got involved with them, and I ended up with a loss. But what happened here in 2017 is the fact that 2017 for me started pretty much as 2016 ended with a few losses, and then I said, all right, let's take a little break in a way that you trade with much smaller trade size. And then by the end of the year, or actually by June last year, I discovered cryptos like everybody else, and I didn't trade them for a few months. But in November, opened up my account, started trading with them, and made about a little bit more than, I say, 240% or so. And if you look across my crypto and across my CFD and Forex portfolio, at the end of the year, I ended up at about 194% return. And with that in mind, my portfolio hit a new all-time high, despite sort of this decline in 2016. And the key point here is that it's a lot of trying. It's a trial and error. In essence, you look at a bunch of trades, bunch of ideas, and you trade several times, and a few of these are gonna be giving you a big chunk of your return. So for example, in cryptos, I bought these moves. I think in the whole crypto portfolio is up with about 30% in the last 2 weeks, and I haven't traded. You see, cryptos was going down and down since December. So I tried two other occasions, made I think 15% loss on one, and then 10% break even on the second one. And then I did trade some altcoins, and I made some money. And since then, I haven't traded. I didn't trade for a whole month, but I bought last week, and now I'm up with about 30. And those returns hopefully will continue to go higher and higher and higher. And then most likely, cryptos is going to be boring for a bit. And if everything goes fine, when it's time to book profits in cryptos, we'll have that breakout in the euro dollar. So euro dollar right now is boring. I'm not gonna lie. There's no way of sugarcoating it. It's totally boring. But take out the high and things get really interesting really quickly. And it's the same thing with the gold. Take out the high and things get really interesting really really quickly. So that's really sort of important to remember. Those risk reward ratios, average win versus average loss. At the end of the day, that's sort of what you should be looking at in your account. But it all starts with having a good risk reward ratio initially. Then you look for sort of the moves, the trends or breakouts, and that's it. Okay. Yes, that's correct, Antonio. I made about 200% in 2 months. Actually, it's probably like 1 month. You know why? Because this is Bitcoin Cash, and this is Bitcoin Cash on the daily, and the market, you can see, moved up, and then it traded sideways. And what I did is that here in December, you can see how the market was trading in a nice range like that. This is resistance, and this is support. So I bought a bit down here, and then the market breached higher, so I bought some more here. And so my average entry was, I guess, 1,620. And this is a logarithmic chart. Let's get rid of the logs. There you go. That's with no log. So I bought about 1,000, say 1,600, and then you can see the market went to almost 4,000. So it moved up with about 150%. I got out at about 100%, so around 3,200. So that was it. This is 100% the Bitcoin Cash. And then you had Ripple, which is XRP USD, and Ripple as well. I bought the first position around 85 cents per coin. So I bought, this is one coin, $1 per coin. Sorry, I'm gonna do like this. XRP Euro, because I have a Euro account. I don't have actually a dollar account. So here it makes sense. So I bought at about 80. You can see here this is 80 euro cents. So I bought pretty much here. I think it was 84. Must have been on this breakout here. And then it went up. And then it reached parity. And then I bought more. And I'm doing very concentrated bets here. And then, as you can see, the whole market just went from, so my average entry, say it was 95. This whole market went up to about 210, and then it went to 280. But I got out after 100% return here as well. So 100 here, 100 there, and then that was it. And I did trade other coins as well, but those were sort of the main bets. And what I'm doing right now, because they're all very correlated anyway, so I have about 30% in Ethereum, 30% in Ripple, and 30% in Litecoin. Litecoin is another one with just a crazy residual ratio, if it plays out, that is. You see here, nice narrow range, break, risk 12%, right now it's up with 17%. But if you take a step back, this is the daily chart, and you can see the nice low here, and the market could potentially go up to 200, maybe 220. Not sure if it's gonna go all the way up there, but that will be a return of about 75% by risking about 12. So 75 over 12, that's 6.5 times, 6.25 times the return. Okay, guys, I'm gonna wrap things up here. Got a question here from AdFresh. What's my thought about the pound dollar? If the market breaks below 139, would that mean that the bear took over the market? Yeah, I think, let me check the actual levels I'm watching. So I'm watching 139.61, and this is the support level, and my idea was for the market to look to bottom out here, but the head of the Central Bank of England came out with a very powerful comments yesterday, and I have a fear, or I think really, that we should probably take it very easy, but it is technically possible to buy here. You still don't have any bullish candle on the 4 hour, but if it manages to bottom out here, it might move up to the upside. Now, what happened yesterday, and you can follow me on Twitter for that, is that Mark Carney said some powerful statements. This is an article on Reuters. So he said here, I don't want to get focused on the precise timing. It's more about the general path, while adding that a rate hike this year was likely. So he's sort of trying to defocus on the market's idea that we should have a rate hike in May. Another thing here as well, he said Britain should prepare for a few interest rate rises over the next few years. So again, sort of telling us that we shouldn't be too focused. Probably we'll have one or two rate hikes, but that's going to be it. So sort of take it easy. And then he said we had some mixed data. We'll sit down calmly and look at it all in the round. So at the next meeting, they'll look at it, and he clearly says we have some mixed data. So he's definitely not going to be voting for the rate hike. So this is pouring cold water on all pound bullish positions. And maybe if you looked at my technical analysis section, so if you haven't checked this out, this is the technical analysis section, and I published yesterday a setup in the euro pound. And I said maybe it will hold. So if we hold below 87.93, this market could roll over. But now we're getting really close to being stopped out. We almost went up and we almost got stopped out. And I suspect the market will try to take out everybody that is short here. I'm not sure it's going to rally higher, but I do have a feeling it's going to try to trigger those levels. And with this we're going to finish. And it's a beautiful example of what at least trend following trading, which is what I do, and it's all about. It's a very nice example because you can see how the euro pound was trading sideways and then took out the low. So by taking out 86.94, this market could decline to potentially 85, if not all the way down to 84. So that's if it would have gone down all the way to 84, then that would have been a 300 pip return, right? And at the same time, you will put your stop loss up here, so it would have risked 100. So that's a very good risk reward ratio and the potentially beginning of a trend. And this is really what it's all about. This time, probably will get stopped out, so we'll lose 100. But if we would have made it, we would have made 300. And then that's sort of what trading is about. And then we just literally need to do that several times per year, several times per month. And eventually you'll get involved in one move that is looking really good. And as I did with Ripple and Bitcoin Cash, if it goes good, we can buy more of it. It's the same thing like with the US 30 position. So in the Dow, I started out by buying the Dow. I can't find it now. So started out by buying the Dow. Went to my advantage. Bought some NASDAQ. So I added more. And I even bought some of the Spanish stock market. Added more. So when things go good, I buy more. Okay guys, we're gonna wrap things up. If you like this presentation, and you want to see more of these, click on it and do smash that like button. Very straightforward. See, there's one guy here. There's one guy that doesn't like these presentations, so he makes sure to come and click on this like. He's a guy from I think it was Lithuania. Out of all of the dislikes the trade captain ever got, like 95% of them are from I think it's Lithuania or Estonia. I don't remember exactly. So click here if you like it. As well, click here if you like to follow. Oh, good. Thank you so much. Cheers. AdFresh has been following me since 2014. Awesome. Okay, AdFresh and Antonio and everybody else that is watching, thanks so much for joining, and I'll see you guys hopefully on Monday, same time here at the live trading room. If you come here and you see that it's the old video, just refresh the page until you see the new one. I will try to upload it before 9 AM, but sometimes I'm starting a little bit late like today. Have a good day and a great weekend. Thank you.